What you're seeing in silver right now is exactly what big institutions want you to believe, that the crash is here, that you should sell, that cash is king. But here's what they're not telling you. A war in the Strait of Hormuz doesn't destroy wealth, it transfers it. And if you don't understand how, you're about to lose everything the smart money is about to take. Let's rewind 72 hours. On April 19, 2026, the U.S. Navy boarded an Iranian cargo ship, blew a hole in its engine room. Iran vowed revenge. Oil jumped 5% in one morning. And what did silver do? Almost nothing. Actually, it dipped for a few hours. Why? Because silver is the most manipulated market on planet Earth. Here's how it works. Big banks, JP Morgan, Goldman, HSBC, they sell paper silver contracts, millions of ounces that don't physically exist. When a war breaks out, they smash the price down for 24 to 48 hours. Why? To trigger stop losses, to shake out weak hands, to make you panic sell your physical silver or your PSLV. And then they buy everything back at a discount. It's not a conspiracy, it's a documented fact. The CFTC has fined these banks hundreds of millions for spoofing and naked short selling. So when you see silver not moving on war news, that's not the market saying silver isn't a safe haven. That's the market saying the fix is in. But here's why this time is different. We have 3 fires burning at the same time. Fire number 1, war in the Strait of Hormuz. 20% of the world's oil goes through that 21-mile wide passage. Iran has already threatened to close it. If that happens, oil goes to $120, $150, maybe $200 a barrel. That's not inflation. That's hyperinflation in a box. Every single thing you buy, food, gas, Amazon packages, gets more expensive overnight. Fire number 2, the U.S. debt ceiling and Fed trap. The Federal Reserve is stuck. If they cut rates, inflation explodes. If they hike rates, the regional banks collapse. We already saw Silicon Valley Bank, Signature, First Republic. That was a warning shot. The next one takes down the whole house of cards. Fire number 3, the end of dollar trust. BRICS nations are buying gold at levels we've never seen. China has been hoarding gold for 18 months straight. They're not doing that because they love shiny metal. They're doing it because they know the US dollar's reserve status is on life support. So you have war, debt, and de-dollarization, all at the same time. And what do most people do? They sit in cash earning 4% while real inflation is running at 8 to 10%. That's not safety. That's slow death. Let me give you 3 numbers that matter more than any headline. Number 1, COMEX silver inventory. Right now, registered silver inventories at the COMEX are at their lowest level in over a decade. We have about 80 million ounces of registered silver. That sounds like a lot, until you realize that one large ETF, like SLV, could theoretically demand delivery on that in a matter of weeks. There is no physical silver to back the paper. That's a powder keg. Number 2, gold ETF outflows versus price. Since February 2026, gold ETFs have seen outflows. People have been selling paper gold. And yet the price of gold is up 12% over that same period. You know what that means? Someone is buying physical, not retail, central banks, sovereign wealth funds, the kind of money that doesn't sell when a tweet drops. Number 3, the silver-gold ratio. Right now, 1 ounce of gold buys about 85 ounces of silver. Historically, when that ratio goes above 80, silver is cheap. When it goes above 90, it's screaming buy. During the 2008 financial crisis, that ratio hit 85. Then silver went from $9 to $48. In 2020, the ratio hit 120. Then silver went from $12 to $30 in 6 months. War or no war, that ratio mean reverts. And when it does, silver doesn't go up 10%, it goes up 100 to 300%. Now I'm going to tell you something most YouTubers won't, the bear case. Because if you don't understand the risk, you're not investing, you're gambling. Bear case 1, the war ends quickly. What if Iran shows up to the Pakistan talks on Monday? What if the ceasefire gets extended? What if Trump announces a deal? Oil could fall back to $75 overnight. Gold and silver could drop 5 to 10% in a single week. If you're leveraged, you get wiped out. Bear case 2, the Fed hikes again. If inflation from the war spikes, the Fed might be forced to raise rates to 7 or 8%. That would crush silver's industrial demand. Solar panels, EVs, electronics, all that gets delayed or canceled. Silver could fall to $18 or $20 before it ever sees $40. Bear case 3, a global recession. If the Strait of Hormuz closes for months, we get an oil shock. Oil at $150 causes a recession. In a recession, everything sells off, including gold and silver, for a short period. Because people need cash, they sell what they can. That happened in 2008. Gold dropped 25% before it quadrupled. So no, this is not a one-way bet. But here's what the smart money knows. Dips caused by panic or manipulation are gifts. The question is whether you have the stomach to buy when everyone else is running. Here's my base case. This is not hopium. This is probability based on history and current data. Oil, $94 to $120 in the next 60 days. The risk premium is not fully priced in. If Iran closes the strait for even 1 week, oil hits $120. If the war expands, $150 is realistic. Gold, $2,400 to $2,800 by end of 2026. Central bank buying is relentless. The U.S. election cycle adds uncertainty. And if the Fed is forced to cut rates due to a recession, gold explodes higher. My price target for year-end is $2,800. Silver, $35 to $45 in the next 6 months, then $50 plus. Silver is more volatile. It will lag gold at first, but once the ratio drops below 70, silver catches up fast. The industrial demand from the green energy transition is real, war or no war. Solar panels alone use about 100 million ounces of silver per year. That's not going away. Next 2 weeks, volatile, headline-driven. 30 to 90 days. If war escalates, sharp move up. 6 to 12 months. Inflation forces the Fed's hand. Metals go parabolic. This is not a trade. This is a trend. And trends last years, not days. You don't need to watch CNBC 12 hours a day. Just watch these 3 signals. Signal 1. Does Iran send a delegation to Pakistan? Yes, equals de-escalation. Temporary pullback in metals, buying opportunity. No, equals escalation. Prices spike immediately. Don't chase, wait for the first dip. Signal 2. The US dollar index, DXY. If DXY falls below 100, gold and silver go vertical. If DXY stays above 105, metals will have a ceiling. Check it once a day. It takes 10 seconds. Signal 3. Silver open interest on COMEX. If open interest drops while price holds steady or rises, that means shorts are covering. That's a bullish signal. If open interest spikes while price drops, that means new shorts are entering. That's a warning of another manipulation slam. Write these down. They will tell you what's coming before the news does. Look, I'm not here to tell you to sell your house and buy silver. I'm not here to scream, the end is nigh. But I am here to tell you that the financial system is more fragile than it has been since 2008. And this time, we have a shooting war in the world's most important oil choke point. You have 2 choices. You can do what most people do. Freeze, panic, and sell at the worst possible moment. Or you can do what the smart money does. Understand the game, watch the signals, and position yourself before the crowd wakes up. Here's my question for you. Type it in the comments right now. Are you buying silver on this dip or waiting for a bigger crash? One word, buy or wait. I read every single one. If you want to stay ahead of the next market move, hit subscribe and turn on notifications, because this story is not over. The next 48 hours will decide whether we get peace or a full-scale war, and your wealth will follow whichever path we take. I'll see you in the next update.